Hi everyone, Adam Harris here. It is the 29th of November 2020. I'm having a look at the major currencies, starting off with the US dollar index. And one of the things that I like the most, that makes me very happy, is to see that we've broken through the 92 level over the last week. That's fantastic. So we're obviously now starting to progress towards 91. There is a little bit of a trend in place, downtrend, so we've got a weakening US dollar in particular. It's very nice to see that we have broken. Let's just check that we confirm that we have broken previous lows, 91.74. So not yet, actually. So we still need to go ahead and break this previous low. I'd like to see that happen this coming week. That monthly chart now producing, in that case, would then be a lower high, lower low. So to have that monthly go into a downtrend, have the weekly in a downtrend, and have the daily in a downtrend, usually should then introduce new trends and therefore trading opportunities over the next week. Now, really, in my experience with currencies over the last few years, they can start a trend and stop it almost immediately. That isn't something that I recall them always doing, but it certainly does seem to be more normal these days. So but that's pretty much it. That's my plan so far. Any kind of pullbacks into the 92 area would be potential shorting opportunities. Preferably we'd break the previous lows just to check that, then we'd come back, test 92, and then potentially carry on down and ultimately head down towards 90. So that's quite good. So that implies, obviously, looking at that, a trending time frame correlated, multiple time frame correlated weakening US dollar, which is great. Then we can see here on the daily, I'm just looking at the euro dollar looking nice, strong daily finish on Friday. That weekly also trending higher towards 1.2, and I don't really see any reason why it shouldn't be able to reach 1.2 based off of this. So I'm going to continue to trade in line with that this coming week. Of course, if we can break through that, that's fantastic, but so far looking to see that happen. Then looking at sterling has pulled back into the moving averages, into a previous, let's call it, resistance structure. So a nice little bullish candle here on Monday or Tuesday would be a potential long opportunity. I'd certainly want to see if I can get 1-to-1 before I get up to 1.34. But the idea being that if I can get to break even before that situation and then obviously take more profit as we head up towards 1.35. So it is potentially possible that that would be the case. The market would head up to that next key level, which is 1.35. You can see that there has been some resistance in this area on the monthly for sterling. So that is also something I want to acknowledge for myself, just that this might indeed represent a problem. But certainly if it does set up and decides to take another run at it, I would prefer to really see to take profit ahead of that level. Then having a look at the Australian dollar, which has been relatively strong. That weekly chart, just a really nice double bottom there, and then seeing price push on and also close to breaking these highs here. The monthly looking nice and bullish, and that daily especially, but 0.74 presenting some potential resistance right now. However, my expectation is we should effectively have broken through. Well, when I say resistance right now, I mean based off this chart as opposed to anything that I've discovered historically. I'd like to see it obviously continue to head up a little bit higher than this, and so that also visually at least looks as though it is supporting a weaker US dollar. Then looking on to the legendary Kiwi dollar, which has been performing so well over the last few weeks. This is now entering overextended territory. It's close to key resistance, and so what my expectation is here is that we'll see how we respond to this. Do we then have a pullback into 0.7 or a little bit further back down into the moving averages combined with, say, Fibonacci levels, and then look for a buying opportunity here? So looking at the first four majors here, we really have, generally they're all supporting the idea of a weaker US dollar. However, sterling and Kiwi are slightly out of sync with the euro and the Aussie, and potentially they need to recycle or do some continued moves. But if the dollar weakens aggressively, there's no reason why the Kiwi dollar won't push on further and become ridiculously overextended. So I'm eyeing out this level with some caution, but this has been the star performer, and therefore it wouldn't entirely surprise me if it manages to go beyond this, but I am just going to be prepared and observe that level of potential resistance. Then dollar yen. So dollar yen is a very tricky one because it is indeed generally dripping through this level, but it's incredibly reluctant to do that, and this has been part of its problem with its behavior. It's definitely got some kind of antisocial behavior disorder going on here, because it just really does prefer to kind of be range bound. And in this situation, what we appear to have is we are bearish. I do expect it to continue down, but at the same time, there do appear to be a number of buyers below this level that just keep pushing back. So your weighting is not necessarily 70-30 bulls for bears. It's more like a 55-45 kind of scenario. So there are, it is capable of pushing back. But nevertheless, if we do see that continued dollar weakening, I expect we'll start to break through these lows and head low. And we really do have that potential. I'd love to see us head down towards 101. Dollar Swissy. At the moment looking really good, similar to euro dollar, started to push through. It's got some local resistance here, meaning just something on the daily and 4 hourly. However, the long-term goal here would be 0.9, and that weekly looking relatively nice and potentially setting up for a longer-term flat level breakout at some point in the future. And we have a monthly downtrend. So dollar Swissy actually looking a little bit weaker than euro dollar, or at least a little bit ahead of the euro dollar in terms of strengthening. It's not 100% inversely correlated. It is highly correlated, but not exactly the same. It's not a mirror, and so I don't want to make that mistake. It is, however, looking nice and bearish. Dollar CAD. Dollar CAD looking good. We've got that daily downtrend. We've got a weekly downtrend, and we have, let's see, a high and a low, and a lower high and a lower low. So we've got a monthly downtrend. So we're starting to push through that level. Yes, I was eyeing out 1.2951 as a daily. Let's go to 1.2950 as a daily support level. And again, there may be trading opportunities around this, especially any breaks through that, any pullbacks into that, and looking for shorting opportunities this week. So, to sum up, so far all of these look very much, all of them including the dollar index, look as though they are pretty happy to continue producing or seeing out a weakening US dollar. As I said before, it's not impossible that that currencies could just reverse for whatever reason on a whim. They never used to do it as much as they do the last, let's say, the last 5 or 6 years, but it's a very common kind of thing. Just when you think they're going to start trending, they just stop. So my plan A is to support the idea of a weaker US dollar and then trade very much in line with that, keeping an eye on key levels, looking for entry opportunities on that. I'm hoping that this will be a very fruitful week in terms of moves. I'm hoping we will see some serious moves that hopefully will continue on into 2021 with a weakening US dollar. This should be good for traders more because it's exiting a range and therefore might begin to trend quite aggressively. And historically, we've actually had that in the past. We've had periods where that dollar can really move. And I'm just hoping that'll be the case here, certainly if that is. That's my plan A. My plan B is just keeping in mind that price can still reverse. So we might get moves for a few days and then have it bounce back from the next key levels back into a range. But of the two, I'm hoping that is the least likely outcome here. That's it. Everyone have a great week and trade cautiously. Thank you.